You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I'm going to speak about into this video is USD JPY, a very interesting market at the moment for a potential trading opportunity. And as usual, I will be keeping this full analysis as educational as possible. So first, I'm going to cover the technical aspect of this market by obviously checking all the directional timeframes. We will then go and see what we have from an order flow perspective by checking the commitment of traders, so the COT data, which is basically what the non-commercials in the market are doing, which are the biggest speculators in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probabilities for a nice trading opportunity on this pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see how this market has just provided a very strong impulse to the upside, followed by this correction. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. Now, if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a perfect 0.382 Fibonacci retracement, which is the first Fibonacci level to which you expect the market to provide a correction after an impulse, which is currently lining up exactly with this previous resistance turn support, creating a confluence of support at this area that we do expect the market to test before a potential rejection to the upside. And in fact, we can see that actually the market has already hit this level once, and there is definitely the possibility for the market to provide another test of this zone before the continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, the price action that the market has been printing is quite clear. We have a market which has provided a very strong impulse to the upside, but in this impulse there is one candle which is of a different color, and it's exactly this red candle here. And if you have an impulse to the upside with one candle of a different color, this means that usually this red candle is a very strong structure area. In this case, it is structural support, so basically a demand zone for this market, since the last weekly close that we have is above it. Because always remember, if you have a resistance zone and the market breaks and closes above that zone, that previous resistance is turned support. So when the market was coming from below, this was previous support turned resistance. But now that the market has broken and closed above the area, this previous resistance is now turned support and demand. And since the market is currently testing it, we can expect the market to reject this area to the upside. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about USD JPY quite a few times in the past. I spoke about it when the market was here. I made a full breakdown explaining all the reasons for which, from this zone, we expected the market to provide this move to the upside, and in fact, that is exactly what the market did. Then, when the market was here, I made another breakdown explaining all the reasons for which, from this area, we expected the market to provide this move to the downside. And once again, that is exactly what the market did. And by the way, I will link these two previous analyses in the description so you can go and check them out for further reference and more free education. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is, as we just said, what hedge funds and the biggest speculators in the market are doing, what we have to do here is check the data for the JPY. Now, why do we have to check the data for the JPY? Because if you look at the JPY, you're actually already looking at JPY USD, because all currencies on the spot are traded against the USD. But since we want information on USD JPY, we simply have to reverse everything that we read here. So since we are reading here that we're checking the data for JPY USD and we want information on USD JPY, we simply have to reverse everything that we read here. And as we can see, net positions lately have been dropping. In fact, we went from having minus 59k net positions to having minus 41k net positions. So obviously we have an increase in the net positioning since we're speaking about negative numbers, meaning that the JPY in the very short term is actually getting a little bit stronger. With the last reports, in fact, we can see that first, hedge funds added 3k long positions and closed 8k shorts on the JPY, and with the new report we have 1.5k longs getting added and 5.4k shorts getting closed. So the JPY in the very short term is getting a little bit stronger, which means that we do expect USD JPY to make a move to the downside. And in fact, we have already seen this move to the downside because clearly hedge funds are adding longs and closing shorts. However, if we look at the bigger picture, the situation is very clear. We went from having a massively positive net positioning with 63.8k longs and 13.3k shorts, all the way down to having a very negative net positioning with way more shorts than longs from an institutional perspective, with 72k shorts and 30 to 31k longs. So even though in the short term we have a strong JPY, meaning weak USD JPY, and we have already seen it priced in with this move to the downside, in the long term the JPY is extremely weak. So we can definitely expect more continuation to the upside to develop. And we have already seen a massive uptrend develop. So going back to the technicals here on the daily time frame, what we can see is that this market has just provided a nice M pattern. Now, generally speaking, after the creation of an M pattern, what you expect is for the market to provide a move to the upside to complete the pattern at the previous support turned resistance. So here on the daily time frame, we do expect the market to provide a nice move to the upside to complete the pattern at this previous support turned resistance. So how we can be approaching this potential longing opportunity here on USD JPY with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional standpoint. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we will have to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding USD JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at the neckline. But until everything from an intraday perspective will remain bearish as it is right now, this market will easily provide a continuation to the downside, which would be even better because when the move to the upside will start, we will have a bigger risk to reward. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.